Probably the most obvious place to start is what's happening in the broader averages. And let's remember that when we look at the daily time frame of the S&P, we'll look at all four of the indices real quick. We'll look at the top of the food chain. When we take a look at the indices, when we take a look at the sell-off, let's build this chart from the bottom up. Let's talk about what we have in terms of our structure. And structure is going to be two things. It's going to be momentum. It's going to be trend. And when both of these are green, this is telling me that the energy is still very much up, right? That's the energy. A body in motion tends to stay in motion. This is just physics 101, gang. When I've got the green candles here, this is measuring, once again, what's happening in terms of price, what's happening in terms of participation, right? Price and participation, still largely bullish. In fact, we haven't had anything but green grab candles, you can see, since the end of January, right? Which is what I've just got on the screen right now. So the context of this move is very much a buy the dip. That's it. Earlier this morning, we were kind of asking ourselves, do we know when these blue light specials are happening? How are we measuring what is truly weakness versus something that's a potential buying opportunity? These are buying opportunities that we absolutely want to keep on the radar. Let's take a look at the indices, and I'm going to show you the economic calendar. NASDAQ, not as steady a structure as the ES, right? But still very much a potential, not just volatility based buy off the daily price movement range, but also the mean reversion, right? When I look at this mean reversion here, once again, price and participation. When I look at this, momentum is bullish, trend is bullish. Candles, right? We definitely know we want to focus on the long side. I like the ES a little bit better. I like the YM a little bit better. Let's talk about why. Very steady in the overall move higher. Not as steady as the S&P. I do like the YM because if there's a place that I want to navigate around tech, this is it. I don't have to be subjected to what is NVIDIA going to do next, what is Apple going to do next, or what's Meta going to do next. But Dow is definitely a play on industrials, energy, financials. Those are three sectors that we absolutely want to keep an eye on as we're going through into quarter two. Russell. Regional banks have had a really nice rally. Russell is absolutely pulling back to the mean reversion, where we're testing the daily price movement range as well within the context of an overall up market, but nothing is better than the S&P. Let's talk about one of the stocks I just mentioned, Meta. Meta is interesting because the number one and number two sectors last quarter was semiconductors and communication. So a lot of folks are asking me, Rag, are those still the strong corners of the broader averages? They're not. But Meta is definitely something that has continued to be fairly strong. And the question now is it supported? I would say it is. Take a look at the daily price movement range. Take a look at where the candles are testing support. Not just the daily price movement range itself, but the first standard deviation of it. So Meta is definitely something we will look at for more upside off that particular zone. And it's done it now for two sessions, both the first and the second now. Let's take a look at something on the opposite end of the spectrum. That's Apple. When I take a look at Apple here, this is the kind of stock, quite frankly, in terms of buys that we want to stay away from, right? This is not the kind of stock. Look at the red candles. Participation, price, right? It's bearish. It's bearish, right? Even the neutral candles hardly can string together much more than a handful of sessions, if that, before it succumbs to the bearishness. And when you look at the structure, it was bearish, it went neutral, it went bearish again. So this is a bearish to neutral environment below the equator. This is not the kind of stock that makes sense to look at primarily for continuation to the upside. Oh, there may be quick bounces, but if you're looking for that prolonged move to the upside, this is not going to be it. The indicators tell us not something that's probable for upside follow through. Well, let's talk about a few places that might make sense for upside follow through. Let's start with gold. And it doesn't have to be gold futures. It can be GLD ETF. It could be micro gold. This is what structure plus the daily price movement ranges equate to. All right, what are we talking about? Let's start at the bottom of the screen. Bullish, bullish. And even when we have some neutral environment, doesn't last very long, does it? We're above the 34 bar wave. Love that. We're above the 200 equator. This is definitely telling us for sure since early March and even mid-March, the green candles, bullish participation, buying is dominating. So this is a trend that we're going to continue to take advantage of. This is a trend that we continue to be taking advantage of, and we're closing on a 3x trade in the GLD. By the way, if you're in the Sector Secrets Mastery, if you're in the Simpler Central room, this was a trade that you got. This was a trade built off the top tier system. What is the support? It's not always going to be a mean reversion. Do we want to focus on the long side, and when can we get in, right? So if you're looking for trades like this, if you're stuck with trades that either aren't going anywhere or worse, are moving against you, we want to work the probabilities. It's not a matter of everything being a winner. It's a matter of, am I putting on enough trades with the expectancy of moving higher, right? And we have a webinar coming up tomorrow, Wednesday, April 3, 8 p.m. New York time, East Coast time. You can register at toptierprosystem.com. We're going to talk about why the kind of action we're seeing is the kind of action that's here to stay. And you know all these things. These have been continually growing in influence since 2020. What's happening with 0 days to options expiration? What's happening with algorithms? What's happening with retail trading participation? This is basically the new evolution of the market. And I'll be talking about how we're evolving our tools to better take advantage of trades like gold, to take advantage of trades like Freeport-McMoran. And other things that, again, once we have the trend in our favor and we can confirm it, how do we find follow through? So see the distinction between something like a Meta or an Apple and the difference between gold and Freeport. How do you find these? You look at all the cues that the indicators are giving. So we're going to be breaking all this down tomorrow. Cannot wait to show you, and really I'm going to give you a sneak peek because proof's in the pudding. What has the top tier trading approach been doing in 2024? It's, moving up. That's all there is to it, right? It's moving up. We'll talk about how this is a year of account growth, two of my favorite words in the world. And until then, enjoy the rest of your evening. If you have any questions, feel free to leave them below, and I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.